Chairman and Managing Director of HDFC. Good morning, Mr. Mistry. I can't tell you how eagerly we have been waiting to have this conversation ever since your results were announced. First things first, the stock has been down about 3% since the numbers were announced, and what is troubling people is that stage 3 assets that you have identified, indicating that they are standard but they are stressed, and that number has gone up to 3% in the March quarter. Although it's come down a bit now, it is worrying people. What's your sense? Is stress built up somewhere?
See, Lata, if you had looked at this number 5 years ago also, you'd have had a number which would not have been very different from what it is now in percentage terms. We've always been extremely conservative with our provisioning, extraordinarily conservative. You will recall that last year when we sold shares in HDFC Life and when we sold shares earlier in HDFC Ergo, in the sense when Ergo bought shares from us, 30% of the profits that we had made, we transferred it into a provision account. So we've been extremely conservative with our provisioning and tried to find reasons to, even if there is the slightest stress on an account, we put it as an account to be, to watch for. So this is the way the accounts have been built up over the last many years. So it's not that the stress has been created today. These are loans which are under watch and have been under watch for the last 5, 6, 7 years. They are not NPLs. I don't believe these are going to turn into NPLs, but these are just accounts that we watch. Now, technically, we don't even need to disclose as a 3A. Yes. That category that we have put, because these are not NPLs. These are performing loans. These are standard loans. Okay. But it's just that because for our internal management purposes, we watch these accounts carefully. We created a new category called 3A. But I repeat that even if 5 years ago, if you had done something similar, you'd have had a similar kind of a proportion that time.
Have you provided for it completely? Yes, or you provide for it 28%?
No, we provide different percentages depending on each account. So that is why the provisioning amount is so high. Now, if you see provisioning, we've actually had to reverse in this account. Okay. Under original accounting, in the way accounting was done in the original gap last year, we could make provisions in a much more liberal manner compared to what we can do under Ind AS. Okay. And therefore, the level of provisioning has actually come. The absolute amount of provisioning has actually got reversed in the opening balance. Okay. Because we could not justify such high provisioning. Okay. So wherever we could provide, we provided the maximum possible extent.
Okay, fine. Mr. Mistry, now that we have you, we also wanted to ask you about this rather unexpected development of one fund voting against Mr. Parekh. Did the fund give any reasons for this?
None whatsoever. We don't know whether it's one fund or two funds or 3 funds. We have absolutely no idea. All we know is that the e-voting takes place, and based on that e-voting, we get the numbers at the end of the year. We do not know who's voted for, who's voted against. We have no idea.
Have they given any reasons?
No one. I mean, there are proxy advisors, and proxy advisors have their advisory reports, and there are a number of these kinds of proxy advisory reports.
Okay. Have you, the proxy reports that have advised that they vote against, what have these proxy reports said? Is it that Mr. Parekh has been there for long, or is it that he holds...
No, there are different things. So some directors, some proxy firm will say that he's been there on the board for long. Somebody else would have said, this is not necessarily for Deepak Parekh. It could be for anyone. Yes. That he's been on the board for a long time, or that he's on too many boards. So those are the kind of questions which people raise.
Okay. No, so is that the reason why Mr. Bansi Mehta and Mr. Jalan resigned from the board?
No. So because we had undertaken a refreshment of the board some time back. So if you see last year or year before last, we had a couple of directors who left. Last year we had 2 or 3 directors who left, and Bansi Mehta and Vimal Jalan had decided earlier that they were going to leave the board. Okay. And they attended the board meeting yesterday, and then after that they resigned. Yeah. So it's something which we had undertaken 2 years ago to refresh the board in a staged manner, because people had been there for a long time.
Okay, no, Mr. Mistry, I've been trying to call you since yesterday and today morning, and you have been busy with investor calls. Are investors...
No, not with investor calls.
Sorry, that's what you told me, I thought. Okay. Okay. No, I mean, are other investors worried? I mean, there will be a lot of people who are holding the HDFC share because Deepak Parekh is there. So were some investors worried that, there are others who are voting against? Did this come up at all in your conversation with other investors?
Not at all, none whatsoever. The few investors I've spoken to, no one has talked about the voting. No one, not one.
Okay. On a more general principle, today actually we had Nilesh Shah of Kotak AMC, the managing director, speak with us, and he was pretty worried about this development. He said FIIs hold a large stake in many big and very good Indian companies, and one doesn't know which proxy advisor they will, follow these funds. Is this a new source of instability for companies held by foreign funds?
I think more than companies held by foreign funds, for someone like a HDFC or for that matter someone like an ICICI or any of these companies which are 100% held by the public and they don't have a promoter shareholder, there is always that element of risk which is there, because if you have a promoter-owned company, then 10, 20, 30, 40% is owned by a promoter who will vote in favor of all their votes, who will naturally vote in favor of resolutions. Okay. So here the widely held company, someone like an HDFC or maybe, as I said, an ICICI would be subject to
open to this
kind of thing.
But actually the Uday Kotak committee also refers to the fact that for good governance, people should not stay on the board for too long. Or there should not be one member with membership in too many boards. So this has also become an Indian preoccupation after the Uday Kotak committee. So do you think this can become more widespread with more people asking board members to be changed off now?
See, I would think that at some point of time, over a period of, say, 10 years or so, there is a need to refresh the board. So that is something which most companies are, to my mind, going to take it up as an active, something which they will actively pursue.
Mr. Mistry, have you had a conversation with Mr. Parekh? I mean, what are his thoughts how is he viewing this development at the AGM?
I mean, development at the AGM in the sense that 77% of the shareholders, 77 or 79, I don't remember what the number is, have voted in favor.
No, I mean the other 22%, 22 odd percent.
But we don't know who those 22% are, no? We have no idea.
Okay, but what are Mr. Parekh's thoughts? I mean, that's something which other investors of HDFC will want to know, and other investors of the entire HDFC group will want to know. You have a huge, large market cap if you count all your listed companies together. I think it will be the largest conglomerate in terms of market cap. They would all want to know, will he continue or is this...
Oh, of course he'll continue. Absolutely he'll continue.
Okay. No, because this might be...
not continue?
No. How has he, as Prashant asked you, how has he viewed this vote coming from 22% of the shareholders? Does he think it is one of those things? Or
what happens is one of those. I think, to my mind, what happens is some of these funds, some of these pension funds, particularly pension funds, blindly follow what the proxy firms advise without applying any their own mind or their own rationale on whether they should vote for or vote against a resolution. So if a particular proxy advisor who they follow has advised that you vote against, they just go and blindly vote against. So I think what one has to do is try and talk to these proxy advisors over time, make them understand the Indian culture, make them understand the way things happen in India, and then after that we can...
Okay, but is this an Indian proxy advisor or a foreign? Whom do these funds normally listen to?
Follow the foreign funds.
It's a foreign proxy advisor?
Yeah. To my mind, most of them follow one or two of these foreign proxy advisors. Someone called Glass Lewis. There's someone called ISS. So these are the ones who are normally followed.
Okay. So now after you have investor calls, media calls, you will also have a proxy advisory call after your results?
We've never done that. No one has done that, to my mind, because these proxy advisors provide advice based on public information. They don't do one-on-one meetings with companies. That's what I've been given to understand. But we'll try and understand a little more of how they work and stuff like that.
All right. Mr. Mistry, otherwise, of course, your results have, no doubts on investors' mind.
I think important for you to understand once again, and let me repeat that the stage 3A provisioning or 3A categorization that we've done for loans is just being extraordinarily conservative.
Okay.
Most companies would have put that as part of stage 1 or stage 2.
All right, Mr. Mistry. Thank you very much for joining us and explaining that. Yeah. I'm sure that's something which the retail investor community very much wanted to hear. Thank you for joining us.
Thank you. Bye-bye.
Okay, all right, Lata, thanks very much for that. So that's HDFC. But with that, it's also a wrap on trading hours. Stay tuned. Halftime report up next.